Ladies and gentlemen, good day and welcome to the Q2 and H1 FY23 earnings conference call of Lumax Industries Limited. This conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company and it may involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. Now I hand the conference over to Mr. Deepak Jain, Chairman and Managing Director of Lumax Industries Limited, for his opening remarks. Thank you, and over to you, sir.
A very good afternoon, everyone. Let me first state a very good health to all. Along with me on this call today, I have Mr. Anmol Jain, the Joint Managing Director, Mr. Vineet Sahni, CEO and Senior Executive Director, Mr. Sanjay Mehta, Group CFO, and Shruti Khan, CFO, along with Ankit from Corporate Finance and Priyanka from Head Corporate Communications, as well as SGA Investor Relations Advisor. The results and investor presentations are uploaded on the stock exchange and company's website. The Indian auto component industry is undergoing a robust growth path with shift in the supply chains, consumer demands, and high development prospects. Growth of the global OEM sourcing from India and localization is turning the country into a preferably designing and manufacturing base. Strong policy support from the government with FAME 2 and also constant R&D support has been the lubricants in this journey. The monthly FADA and auto number data has been extremely encouraging and points to the demand recovery in the vehicle retail sales rising to 48% in October compared to the same month last financial year on account of the festive season and monsoon. Good market sentiment coupled with festive boosts made the festive 22 as the best in the last 4 years. If I look at segment-wise as well, I think the passenger car recovery in this financial year will actually be the highest in the country, surpassing the peaks of 18-19. Other segments are trailing behind. However, we are encouraged by the government's infrastructure development and also the future mobility that the other segments like the commercial vehicle as well as the two-wheelers would also catch up. Other key driver for the industry growth still remains EV, which has increased focus on technical advancement and improved market share. We continue to strengthen our position in this segment, and the increased penetration of EV should also help the growing volumes going forward. This is also substantiated with our growing order book of the OEMs and new model launches planned in the near future. With the new launches also across segments and improved demand for premiumization, we find ourselves well placed and equipped. We continue to maintain the market leadership in lighting. The quarter also embarked the acquisition of 100% ownership interest of its subsidiary Lumax Industries in Czech Republic to further strengthen its technology and innovation capabilities. We are focused on becoming self-reliant in design and development. With increased investments in R&D, we have also become the preferred partners for Indian OEMs offering best-in-class lighting solutions across various sectors. A collaboration with Stanley Electric Company Japan, which is the only global auto lighting company to manufacture LED worldwide, has also been a catalyst towards this technological advancement. We are working towards developing products indigenously and building premium products for which we have seen increasing demand. On the EV front, as I mentioned, the industry has a huge uptick in demand, and we are going to leverage this with our cutting product portfolio. We are also quite certain that although the two-wheelers had been the fast adopter of EVs, now the passenger cars will also see an uptick. As mentioned in the previous quarter, out of the order book of around 1,000 crores in the next 2 to 3 years, 30% of this consists of EV vehicles. Now I would like to hand over the line to Mr. Sanjay Mehta, Group CFO of the company, to update you on the financial performance of the company.
Good afternoon, everyone. I will update on the operational and financial performance for the quarter 2 and 6 months ended FY23. The share of LED lighting for the half year as a percentage to revenue stands at 35% and conventional lighting at 65%. With respect to segment mix for 6 months, 65% of revenue is from passenger vehicles, 29% from two-wheelers and 6% from commercial vehicles. With respect to product mix, 66% of revenue is from front lighting, 24% from rear lighting, and 10% from others. Talking about the financial performance, I am delighted to say that in the quarter 2 FY23, company has achieved the highest ever quarterly revenue standing at rupees 620 crores, depicting a growth of 37% on year-on-year basis. Revenue for H1 FY23 is at 1132 crores as against 767 crores, witnessing a strong growth of 48%. The manufacturing revenue for H1 FY23 has grown by 49% to rupees 1101 crore over H1 FY22, out of which 38% growth is from volume, which is better than the industry, and balance 11% is value driven. The company reported consolidated EBITDA of rupees 112 crore with a margin of 9.9% in H1 FY23 as against rupees 50 crores in H1 last year, up by 340 basis points. In Q2 FY23, EBITDA stood at rupees 64 crore with a margin of 10.2%, up by 110 basis points. PBT before share of associate is 37 crores in Q2 versus 20 crore in the corresponding quarter last year, registering a growth of 87%. The PBT for H1 is rupees 60 crores at margin of 5.3%, up by 440 basis points from H1 last year. The profit after tax after share of associate stood at rupees 53 crore at 4.7% for H1 FY23 as against rupees 5 crore in H1 FY22 last year. For Q2 FY23, the PAT stood at rupees 33 crore as against 15 crores for Q2 FY22. CapEx incurred during this quarter is 33 crores up to 6 months. With this, we can open the floor for question and answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ashin Modi from Equirus. Please go ahead.
Yeah, thanks for the opportunity and congrats to the management for a strong set of numbers. So, sir, my first question is regarding our revenue. So, I was going through our customer-wise revenue mix. So, we have in this quarter we have seen very strong ramp up in sales to M&M and to others, other OEMs. So, could you please give a color on this? What is our share of business with M&M and what sort of a pickup are we seeing in M&M and other OEMs?
So thank you. I think you're right. I think the Mahindra, if I would look at the 6 months, has actually, our customer growth has been almost 70% on the account. And it's actually now become the number 3 customer for us after Maruti Suzuki and Honda two-wheelers. I think clearly Mahindra with basically its new launches where we are on Scorpio. Also, we had prior said that we are on the Thar as well. That has actually become a strong player for us. We had basically not been on those platforms, so these are new business wins for us. Of course, with the whole market turning into an SUV space, Mahindra still leads and is coming back with this. Also happy to say that in the next few platforms as well, I think we are a preferred lighting player to Mahindra. So you'll continue to see a good strong set of numbers with the company, with Mahindra itself. So I think, of course, if I look at it today, I think Mahindra, we are having 70% in the front lighting share business, the wallet share with Mahindra. And in the rear lamps, we are 30%. However, as I said that after securing the next few orders, we increased the wallet share to further increase.
Okay. And so in the others? So we are talking about
I think we've been able to sustain that. So if I were to look at it in terms of, again, Maruti Suzuki, our basically growth has been fundamentally 30% plus. Honda two-wheelers, we've been about 38%. And of course, Tata Motors, we've been 76%. Hero also, we've actually been about 35%. This I'm again talking about H1 21-22 versus H1 22-23. Also, I think I want to put in point is that TVS, we are again had entered and we continue to grow strongly with them. Again, half-yearly growth had been with about 48%. We're pretty bullish on all these customers, including Maruti, Mahindra, Tata, and on the two-wheelers, as I said, about this kitty as well. So we see, I think, strong growth prospects with all customers. However, as said, maybe Mahindra would probably lead the pack because of certain new business wins.
Okay, thanks a lot, sir. And sir, the next question is regarding our order book. So our share of LED is approximately 34-35%, and it has stayed there for a while now. So could you please share a color of what percentage of your order book is LED, and what sort of a share do we see going there?
I think we continue to maintain that going forward, we will be having in the next 3 to 4 years about 50-50 LED with conventional. And the matter of fact did remain that if you see over the last 2 years, there were limited launches and new product launches into the market because primarily reason was on the pandemic. You can actually see most of the vehicles which have launched now recently have some element of LED, with also a 1,000 crore order book has almost all product developments into LED and in all segments as well. So we do definitely see a rise now once this whole pandemic and new launches start coming in, more and more revenues accrue from LED.
Okay, sir. And sir, thirdly, on the content which is there, so this LED penetration, we have mentioned that headlamp is 4 to 6 times more expensive. So if you could give us an understanding on what sort of a content difference is there from a SUV to a normal car, and what sort of LED content per vehicle we see in an LED and a halogen?
I think we again mentioned before, I think it's kind of different depending on the segment, but I think right now you can look at probably around about 2x to a 3x kind of a revenue content value add. And the reason why we say this is because it depends on the amount of LEDs or what types of LEDs are being utilized in it. So that's where it is. I think also in our sense, in the two-wheeler also, we're seeing around about, I think, 1.5 to 2, basically.
Okay. Okay. So, and so my last question is on margins. So while we had a very good quarter in terms of margins because of better operating leverage, but gross margins continue to shrink. So if you could highlight something over there, and also what would be the impact of Forex on this quarter's margin?
So in fact, the margin net of Forex of around 3 crore on 6 monthly basis, around 1 crore in Q2. The RMC for 6 months stood at almost around 64.8%, slightly higher than the H1 of the last year because of certain price reduction is given to the customer retrospectively.
So I think clearly, we see this as a scope of improvement. There are certain price corrections which we are also expecting in the next forthcoming quarters. As you see over the last 6 months and even about a year or so, we have been basically talking about a back-end arrangement with customers and with basically prices which had been firming up in the past. I think we have to still put out claims which we probably would get in the forthcoming quarters. You'll see that probably get adjusted over the full year time.
Okay. And so lastly, if you could tell us, so we have been talking about this Bawal plant and its structural impact on margins. So, what is its current capacity and what sort of impact it could have? If you could explain that. Thanks. That was all from my side.
The company has two plants in Bhaval. One is for lighting products. Second is for electronics PCB. I think you're talking more on the electronics PCB plant, which we had commissioned about 3 years back. There, I think, of course, the electronics is going to continue to play a very key role in our localization and indigenization scheme. The impact, if you see, has already been into the books of almost around 150 bips. But however, if you see, it's more of insourcing, so it does not really accrue to our revenue. However, I think going forward, we will be further expanding maybe 2 more lines. Currently, the capacity is with 4 lines, and now we will actually add 2 more lines going forward, which will further enhance basically value realization.
Thanks a lot, sir. That was all from my side.
Thank you.
Thank you. The next question is from the line of Abhishek Kumar Jain from Dolat Capital. Please go ahead.
Thanks for the opportunity and congrats for a strong set of numbers. Sir, what is the current capacity utilization right now?
So currently, across basically the plants with our current capacity, it is somewhere around about 85 to 88%. That's where the company's capacity is utilization.
So most probably the next years we are seeing a strong growth in the passenger vehicle segment. So are you looking for the capex for the new capacity addition?
So I think there has been a plan and discussion in the board. We will soon basically try and look at it in terms of the outlook, in terms of capacity expansion. Most likely we may have to expand nearer to a faster growing customer, which is like Mahindra. So that would be in that kind of a region.
And are you looking for the new capacity for the new plant of Maruti Suzuki?
No, that I think we have good plants, good actually capacities in the NCR. You have to understand that although Maruti Suzuki has announced going forward 1 million in Kadodra, this is very close to our current plants in Daruhera as well as in Bhaval. So we will consolidate capacities there. Gujarat, we already have a good basically thing. But I think fundamentally we will see certain capacity kind of balancing in Gujarat as well as I think in the western region, which most likely would be in the Pune area.
So what is your overall capex plan for the next 2 years? I mean FY23 and FY24?
I think we will see. As of now, we are still under deliberation and probably getting the order books reviewed with the customer. We will probably be able to disclose it next quarter.
Okay. And next question is regarding the margin side. So as you said that there was a volume growth of around 38% out of the 47% growth in the revenue, and rest is because of the better product mix. So just wanted to know what is the impact of the RM inflation in the overall revenue and the margin side?
I think the total RM impact would be somewhere close to around about 0.8, so 80 bips as such. And we also expect this to get rationalized. As I said, so we are talking about certain price settlements with our customer, which usually does lag for about 6 months. Hopefully in the next 2 quarters, we'll see that coming in.
So most probably the gross margin will expand in the coming quarter, and that will also be positive for the margin side, right?
Yes, we should be. As I said, we're talking about quarter on quarter. I think our intent is to basically get into a double digit and then further to a double digit team. I think this is the company where we probably are looking at certain avenues to kind of put that roadmap in place.
So seems like we lost the connection for the current participant. We move to the next question from the line of Amit Hiranandani from Smiths Limited. Please go ahead.
Hi sir, just can you please throw some light on the demand for the passenger vehicle post festive season, especially if you can comment on the entry level segment please, and continuing with this, please throw some light on the two-wheeler industry demand scenario as well please.
Sure. So I think I personally have always been extremely bullish on the Indian auto space. We are seeing a very clear uptick on the passenger vehicle, a very, very strong demand. We also do see that there is ease of the semiconductor requirements, and also I think the OEMs have started to source, inventorize semiconductors to meet their next 3 to 4 months or at least 6 months outlook. So in terms of the entry level, if you see, I mean, this is the first time that the entry level segment has also seen an uptick, and that's primarily because of the launch of Alto. Alto K10, fortunately, we are on the headlights onto that. So Maruti Suzuki is gaining traction. However, I think we are going to look still at the compact SUV as a much more aggressive segment in the past car. But overall, we are bullish on the three, which is Maruti, Mahindra, and Tata, to actually take the industry growth forward. As you already know that the Kia, Hyundai, they basically are being catered by the associate company as a Lumax. But these four vehicle manufacturers, Maruti, Mahindra, Tata, and if I look at the Korean group, they almost comprise 90% of the PV segment. And that, I think, is a very strong indicator how these companies would probably go perform in the future. Two-wheeler segment, I think two-wheeler segment had a better than expected festive season. However, post the festive season, we do feel that in this coming quarter, there will be softening. We are seeing certain traction clearly in customers like HMSI and TVS, Hero being stable. However, I think Bajaj has a concern because of its export portfolio, not the domestic portfolio. With basically rural demand also kicking in and usually a laggard of about 6 to 8 months post the pandemic recovery, we do feel that the two-wheeler would also in the next quarter, or at least in the last quarter of this financial year, should basically again see a uptick on it. So that's where it is. Also, one I would like to mention that the CV has also picked up. We probably would be crossing almost about 1 million, which would be after extremely long time. The tractor industry, the FCS industry also holds stable. So all in all, I think a very good year, better than expected year. And it seems that at least with the lead of fast car segment, it is sustaining. And I can probably say that with the government's thrust on infrastructure spend, specifically on road development, I think this is basically boosting the auto sales.
Okay. Sir, my second question is basically, can you throw some light on the import content and what all components basically we are importing? And if you can throw more light on the backward integration, what we are planning now?
So I think if I would look at the total imports of the company, it would be around about, in 21-22, it was about 184 crores, which is about 16%, right? So that is basically where it was. And I would actually say that, does anyone have 22, this one going forward this year? So it's pretty much aligned with that, almost 20%. Most of the contributors would be on the electronics. It would also include probably the plastic parts, which are advanced plastics, which is not available in India. What we are trying to do is we are trying to localize the SMTs and the PCBs because more and more as the LEDs start to come into the lighting, this will become more and more as a scope. And with that, although the key components or the smaller components like the ICs, like basically the resistors and capacitors, they still continue to get imported, but there would be more value add which will be done in India through the SMT lines as well as maybe PCB localization.
Okay. So my last question basically, if you can tell me just the margin differences between the LED and the conventional lighting.
Well, I think marginal difference would be probably around about now 100 to 150 bits. Again, it all depends, again, as I said, on the amount of LED content there would be, so that's where it is.
All right. Thanks a lot.
Thank you.
Thank you. The next question is from the line of Sunil Kothari from Unique Asset Management. Please go ahead.
Thanks for opportunity, sir. Congratulations for good numbers. Sir, in your initial remarks, I think you spoken about something on designing and manufacturing capability of our company and our country and some outsourcing possibility or something like that. So if you can elaborate on those opportunities, combining this with maybe your recent interaction or visit to collaborator or customer outside.
Well, first and foremost, good evening, Sunilji. It's always a pleasure to hear you. So I think you're mentioning about is in terms of the Lumax Industries Czech office, right? I think that's where what was there in my opening remarks. I think clearly the Czech Republic is primarily to strengthen our design and development capabilities. So we have opened an R&D center there, engineering center there. We have almost about 15 people as resources, and this is primarily for advanced electronics. If you remember 6 years ago, we had done a very similar exercise with Taiwan, and we had opened up for our project management and electronic Taiwan tooling. We continue to have that, and this is an expansion into Europe. This will assist us in basically gaining more orders for the Indian market, or specifically customers like Mahindra and Tata who already have a presence in Europe, and they do a lot of development in England. Second, in terms of our, we had a partner's visit, actually after almost 3.5 years, we were able to go to Japan, and last week just coming from there, had extremely encouraging discussions with Stanley Electric on basically business acquisition, support in terms of technology development, and maybe also in the future looking at certain global scenarios where India could be used. But currently today, given the high capacity utilization of the company and a good and strong order book, our focus remains to basically mature and execute these order books and continue to try and gain certain wallet share with certain customers.
Great, sir. And my second question, only this very substantially high profit share of associates, which we received during this 6 months, almost 16 crore. If you can talk something, whatever possible from you, how this margin is improving, business is improving very clearly, that because of Hyundai and Kia both are doing really well. So
I think you know, this investment and the associate company of SL Lumax has really paid off good dividends and good basically strategic focus to us. We will continue to maintain that relationship, as you already know.
The person you are speaking with has put your call.
Am I audible now?
Yeah, yes, sir, yes.
Okay, sorry. So I'm just going to repeat that. I think fundamentally this collaboration with SL Lumax has really paid rich dividends, both in terms of financial and strategic partnership. We continue to basically hold 20% plus equity there. And with that, I think we are able to have a lot of leverage onto the market consolidation. Hyundai Kia continues to have a good growth prospect. I think currently with Hyundai's capacity is limited, there is, you see, a much more bigger chance with Kia. But I usually take that, at least for the company, as one block, as Korean. And as I mentioned today, together, they're almost close to around 20% market share. We expect them to have strong sustained growth. With that, the company will continue to further grow. However, as I mentioned earlier in my call, we should not look at a quarter-on-quarter performance because they are dependent on only one specific customer, also have a global, basically, I would say codependence on each other. So we should look at it as a full year to go ahead. And there we have seen that in the past, they've actually maintained kind of a 5 to 6% PAT level for the full year going forward. So with that, I think we are pretty much saying that we would be able to perform. But, you know, obviously the quantum of profit will enhance because they have also got a very strong growth in the revenue.
Thanks a lot, sir. Wish you good luck. Thank you very much.
Thank you. Thank you very much.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Jatin from RTL Investments. Please go ahead.
Yeah, hi. Good evening, sir. Thanks for the opportunity. 2 questions from my side. One is on the sustainability of this, SL Hyundai JV number. I think you briefly mentioned about that the quantum of profit will vary, but this quarter the number is really at 11.5 is a big number. So is there any one-off there?
I don't think there's a one-off. I think, again, as I said, they keep on doing in terms of pricing. I never look at it as quarter-on-quarter basis. I always usually do it on the financial full year kind of a visibility. What I mentioned was prior that as they grow and as they continue to basically grow in terms of revenue, the quantum of percentage may not basically vary for the full fiscal. What this probably would enhance the value of the profit, and basically, of course, with the percentage, we will also consolidate that much in the associate profit.
Right, understood. Second question is, we've historically kind of spoken about trying to get to a 12 to 13% kind of margin. Now, looking at this quarter, this was a fantastic quarter in terms of revenues, right? Almost 620 crores, and still our margins are at about 10%. So this journey from 10 to 12, 13%, what are likely to be the key components of it? I think you mentioned 80 bips from the RM side that could get reversed, but in terms of the additional 200 bips, where do you think that could come from?
Clearly, I mean, say there are two factors for it. Number one, I think clearly there should be a more stronger focus on our gross margin, and that means improvement on our RMC. So that's one. Of course, I think we would like to also ensure that we continuously improve on our productivity, on our cost competitiveness. And with that, I think if you see the manpower and other expenses, which kind of holds on to around about 25, 26%, we should see some improvement there. So I think that's where we are looking at. I think clearly over the last few years, our fundamental focus had been on basically realization of profit because our revenues had stagnated, and revenues had stagnated primarily because of the reasons that there had to be some capacity rebalancing what we need to do. So I think going forward, we see a strong order book. If you're able to basically execute that with basically an eye on our RMC as well as on the other expenses, I think we should be in a good position to get into what we had looked at, a double-digit 12 to 13%.
And this, you're adding 2 lines at the Bawal SMT facility. What sort of contribution can that provide? Because you are doing a backward integration.
Bawal has already been executed now. I think the issue with Bawal was that all of the investments had been put in. There had been no revenue because it's more of insourcing. However, there was a margin improvement. If you see about 3 years back, we were actually almost around about 8.5. So we actually went up about 100 to 150 bits.
Oh, sure. Just last question. You in the press release mentioned that you've acquired Volkswagen as a new customer. This is just for India, or are there plans for doing something on globally as well with this?
This is primarily Volkswagen Skoda. As you know, in India, Skoda is more aggressive to the business, and this is primarily for their Indian project going forward.
Okay, great. Thanks a lot, and best of luck for future.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Saumil Shah from Paras Investments. Please go ahead.
Hi, congratulations on good numbers. Sir, I wanted to ask, so normally our second half is much better than the first half. So can we assume similar kind of growth in second half?
Well, I also look forward to it, Saumilji, because usually the industry second half is also good, better than the first half. And as you know, Lumax Industries kind of, has a high market share, is in the PV segment. But what I can definitely say that we are bullish and we expect this kind of revenue pull to continue.
Okay, so at least, double-digit growth is possible? Hello?
Yeah, I don't see any red flags, as I said.
Okay. And so one suggestion that our equity is too small. So, are we looking to do something on that front?
Well, as of now, not, but please do keep on giving a suggestion. We'll do consider it.
Okay. That's it from my side. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Komal Ladha from Yellow Jersey Investment Advisors. Please go ahead.
Hi. Congratulations on the good set of numbers. I wanted to ask that you in your previous conference call stated that you're targeting 25% market share for LED lamps in commercial vehicle segment. So what is the current situation there, and what is the revenue that we can expect from there?
Not sure when I said that in terms of 25% market share. However, let me just clarify that I think we have always maintained that we will basically continue to have our revenues coming in from LED as a 50-50. Right now, as Mr. Mehta just said, that our basically LED revenue is primarily coming out at 35%, and that basically becomes a growth driver for the company. In terms of the commercial vehicles specifically, I think we are seeing a good traction in terms of the LED adoptions and also adoptions of futuristic LED headlamps and lighting in it. So I think we are putting in our efforts to get into certain Tatas and Ashok Leylands because they are the two large basically contributors for basically the series.
Okay, and can you please tell us what is your market share currently in CV and farm equipment segment?
So actually, our basically CV and SES, if you look at it, we are primarily in around about 7% only.
Okay, thank you.
Thanks.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Harshil Shah from Annual Shares and Securities. Please go ahead.
Hello, sir. Congratulations to the entire team for the great set of numbers. So most of my questions have been answered. So if there's any further question, I'll get back in queue.
Thank you. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Ashin Modi from Equirus. Please go ahead.
Yeah, thanks for the opportunity. Sir, in this other OEMs which we club, there also there's a very good uptick this quarter. So we were talking about MG, adding MG as a customer. Is it because of that? If you could talk more about it.
Sure. I think MG, as you know, in our last year, we had actually invested in our Sanand expansion. It was primarily done for MG Motors. MG basically continues to be almost, so we are almost 100% on basically MG. I think this was done for the Aster as a product. MG continues to have a strong pull in the market. Of course, there is some recent news, but I think we are pretty bullish because they have a good product portfolio and product line. So what our fundamental strategy has remained is that in the pass car, the 90% of, as I said, say only 4 companies are basically doing 90% of the pass car business, right? And however, say we would like to continue to be 100% on Hyundai Kia. We are somewhere between 40 to 60%, depending on our wallet share with Maruti, Mahindra, Tata. We want to continue to at least sustain that and then grow with certain spaces where we were not there. Like, for example, MG Motors, we would like to in future up our share in other vehicle makers as well. TVS is a good example where we were not there and we've basically gone high. Also, Suzuki two-wheelers, we have actually recently acquired certain businesses and we would like to keep that same kind of a control with the two-wheeler segment as well. So that's where and how, because we having a higher market share, the only way to basically further dominate it and innovate it is basically to try and get new customer acquisitions.
Okay. And so we were talking about this HVAC business getting added from FY24. So where are we on that and any new products which we are planning?
Yeah, HVAC, basically we are on target. We have secured order for basically one customer. We have already said that the Q4 2023, that would basically be the SOP. And after that, we probably in 23, 24, we would realize, and that would be probably around about a 35 crore business. It's in terms of value, may not be that significant for the company, looking at the size of the revenue of the company, But I think in terms of strategy, it's extremely important because that basically kind of gives further collaboration with our relationship with Stanley, and this is the next product post-lighting that Stanley has globally to offer to our customers.
Okay, so thanks. That was all from my side.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference back to the management for their closing remarks. Over to you, sir.
I would like to thank all our shareholders for joining on the call, and really thank you for your continued support and guidance to us. I would like to say that we do remain very confident on the growing prospects of India and along with that, the automotive sector. I do hope that we've been able to respond to your queries adequately, and for any other further information, request to kindly get in touch with SGA Investor Relations Advisors. Thank you very much and have a great evening. Bye-bye.
Thank you. Ladies and gentlemen, on behalf of Lumax Industries Limited, that concludes this conference. We thank you all for joining us, and you may now disconnect.